Have you been wanting to buy a home for your pup or family, but it just seems a little bit out of reach? I know, I get it. It can be a little bit scary too. But with this strategy that I'm going to share with you, lots of homeowners are having amazing success. If you're new to my channel, please like and subscribe below. That would be wonderful. I would so appreciate it. This strategy works best if the home has been on the market for 3 or 4 weeks because the seller's feeling a little bit of pain. By the third week, if that home is not in escrow, the chances of you getting some seller concession are good. At 4 or 5 weeks, it's almost very, very likely that you would. So it's a really great tool, but you need to know your agent partner needs to know when to exercise or when to utilize this. And so when you're working with TDR Mortgage, one of the things that we do is make sure that you're partnered with a top-notch realtor. I'm even going to show you how to position yourself so that you can take advantage of future refinance opportunities, which means money in your pocket, even if your home value goes down. This information, it's pretty shocking when you see it on paper and you see how much the savings really are. I'm taken aback and I'm so excited to share with you 2 scenarios, one at 575 sales price and one at $1 million or so. Also, if you could be so kind as to comment below. I love hearing people's input and I love answering questions. So if you could do that, that would be amazing. Okay, there is a lot of information on this screen. What I'm going to do is with my cursor, I'm going to put your eyes on the really, really important stuff. So that way this video goes by faster. Otherwise we're going to be here a long time. This chart is something that would be customized for the client, and this is an FHA loan. The buy down strategy, that's what I'm sharing with you, a buy down strategy that works on conventional and FHA loans. Okay, so this is a 575 sales price, 6% interest rate, 30-year fix. The payment's $33.26. That does not include taxes, insurance, and mortgage insurance. This is an FHA loan. That additional payment is about $1,100. So if you do the math and add $1,100 to this $33.25, that's the payment at $33.26. I put this together for my buyer, Betty Buydown. Yes, I know, hard to believe that Betty Buydown is a name, but it is. Shelly Steamhead and Betty Barracuda. Now, one thing about Betty Barracuda is Betty Barracuda becomes putty in our hands. When you're working with a listing agent and you're a team of a realtor and a buyer's agent and a mortgage lender, the one thing that you have to do is you have to pull out those negotiating guns, which means you do all of the things that it takes to make nice with a listing agent. That is probably, besides writing a strong offer, that is probably the number 2 way to get your offer accepted. I'm not even kidding you. You wouldn't believe how many agents lose the offer for their buyer just because they don't know how to talk to people. Okay, buy down. It's a 1-0 buy down, a 1-1 buy down, a 2-1 buy down, or a 3-2-1 buy down. On a 1-0 buy down, it costs $48.55. You're buying this down to 5% for the first year, then it goes back to 6%. The reason you're looking for these properties that have been on the market, 3 or 4 weeks, is you need the seller to pay this for you, this $48.55. So this seller, year 1, is going to pay your payment in advance for you. Pretty cool, right? So if you look here, you will save $4,175 in year 1, by the seller paying this $48.55. Now let's drop down. I'm going to make this just a little bit bigger here. When you're doing the 1-1 buy down, that means you're buying it down for 2 years. So look, it's 5% for 2 years. So you're saving, the seller is subsidizing your mortgage payment by paying $83.23. So now it's costing 1.5. The seller's going to pay that if you're able to negotiate it, right? All of this hinges on a buyer's agent being very, very strong and able to negotiate on your behalf. This is where it starts to get nice, right? This is a 2-1 buy down, but it also is more expensive, right? It's $13,000. So year one, it's going down to $4,000. The normal rate, the normal payment would be this $33.26, but here for the first year, it's $26.49. That's almost a $700 saving. So that's pretty huge. And then year two, you save $348 a month, and so on. The 3-2-1 buy down starts at 3, year 1, year 2, 4, and 5. But look, this is a pretty big chunk that you're going to be asking the seller to pay. And it depends on you, your specific goals. Me personally, I own houses already, and I would probably, if I'm asking the seller to pay $70,000 or $25,000 to basically subsidize my payments for the next few years, me personally, I'd rather have a lower sales price. But there are benefits to the buy down in that if you're able, being a homeowner has so many advantages. And if you're in a position to where you're in an upward trajectory with your income, maybe you work for a federal or a state agency, and you have incremental pay increases where, let's just throw out the window that the rates are going to go down. We are going to make sure that you can afford that initial note rate. So getting this loan, you would have to qualify, and you would have to be able to make a payment if it were 6%. Now, this is something that is so cool. Let me making the screen lower. Let's say you got to do this 2-1 buy down, and it's the end of 23. You saved $8,000 in basically subsidized payment, right? $8,000. The interest rate went down to 3.5. Your note rate is 6%. You can do a streamline refinance with no appraisal. So even if your house is now worth $550 or $525, that can happen. We do not know. Everybody has their take on what's going to happen in the market, but there's a lot of people out there that right now are forecasting that we're going to be in some kind of way when this recession really hits. The problem with that is, and this is what you have to look out for. Let's say, prices have come down 10 or 15% already this year. They have. In some area, and some sales prices more. Higher end houses in some areas have come down more. Some areas it's been less, but it's come down. Now, what if it comes down another 15% by next summer? We are going to be in like 2020 price ranges. I can tell you, I know several people that would be all in, writing offers, all cash to get their offer accepted. That's where you have to be careful, is trying to time the market just exactly right. If something works for you and you have the opportunity to be a homeowner, grab it and then refinance down the road. Again, no crystal ball, but the chances of the rates going lower are about 99%. So that's what happens when there's a recession. Let's go back here. Okay, so this is what the buy down looks like at 575. Let's go. Oh, let me get back to this one thing that I was talking about. Sorry. I was just getting really excited. Okay, so the rates go down to 4%, and you have a note rate at 6%. So what you want to do is refinance, streamline refinance, no appraisal, you will get this $4,000 refunded to you in the form of a principal reduction. It will go to a principal reduction. And so that's what's cool about this, is it doesn't go to waste, right? So if you're getting like $10,000 from the seller for a buy down, but you have an opportunity to streamline refinance down the road, well, you want to be able to take advantage of that and not lose that money. So I feel like that's very nice of the people that, are running this program, don't you? Okay, this is $1,010,000 that I did for my friend Danielle. She has a condo in Newport Beach. She just did a price reduction. It was at $1,040,000, and they just reduced it. What was that? $30,000, right? I think plus or minus. So if they would have been able to do a buy down, so if they reduced it $30,000, we would be, let's just say we're right around here. Maybe you would go in and write an offer at $1,030,000, and then opt to do this buy down. And this is where it puts you. So you would buy down, do a 2-1 buy down. Year one, it's 3.5, and the payment is $4,081. You're saving almost $1,100. So that buy down saved you almost $13,000 that first year. You're gonna use the same refinance strategy. If the note rate is 5.5, this is an FHA loan. I priced this out on a different day. And then it also is a little bit higher loan amount. So these are just examples. It's not an offer to lend. The rates are based off of so many things, how much you put down, what your credit score is. So the rate is 5,161. The rate is 5.5. Payment's 5,161. But on this buy down, you're paying over $1,000 less, which that's huge. And then you have the opportunity to do a streamlined refinance and possibly have it stay in this area for the remaining term, and then have a portion of this refunded to you. Where it gets really, really sexy is down in this area when you see the 2.5. So if you have an opportunity to get money given to you, and you can afford this $35.91, and you qualify for this $51.61, you might come out the hugest winner next year when the rates go down into the 3.5s or the 4.5s, and you have a permanent rate down here as opposed to the 6%. So I think this is such a great strategy, and there's so many facets to it. This is where the lender is so important. TDR Mortgage takes the approach where we're going to tell you the pros and cons. We're going to be like, oh, well, if you're going to get $40,000 for the buy down, what if you just have a $40,000 less sales price, and then tough it out, suck it up at that 5.5% rate, and then just streamline the middle of next year? That's also an option. There's so many ways to do it and so many ways to customize it. Let me customize a loan for you. You can call or text today to 909-920-3500. And don't forget to like or subscribe to my channel. I would super appreciate it. Have a beautiful day.